Hi everyone, thanks for joining us today. It's a sunny Tuesday afternoon. Hope everyone's enjoying it. Today we're going to do a little bit different webcast, and actually we've had some questions come in from all over Ontario, and thought we'd go back and forth and address, I guess, some of those questions.
Yeah.
So I think you have the first one.
Okay, I'll go with the first. So this one comes in from Hamilton, and he asks a very generic, how are you growing your business?
Yeah. So I went out for a nice lunch with a couple of people that actually live in the Hamilton area. And he was asking me that when we had lunch. And I said, predominantly, we have family, friends, and the referrals are coming in from those existing clients. You and I have done a few different things over the last couple of years for different marketing purposes, exposure, where we've been involved with wealth management forums. I did a little video with National Bank Independent Network, and most recently, you just did the Globe and Mail article,
Hmm. Yeah,
right?
that was good
All those
publicity.
things are, giving us a little more oomph and probably more questions coming in, which is great.
Yeah. I was not invited to that lunch, by the way, and you went to the Hamilton Golf Club, right?
I did. It was wonderful.
We have a base of clients who are friends and family, and now that we've been up and running for over 2 years, they're happy with the service, presumably the returns, and now they're telling their friends, family members, neighbors about us. And the
Mm,
last few clients we've signed up have all been referrals. We signed up a lady just today, actually, and that was a referral.
mhm.
Um, so that's the
Yeah,
best way I think we can grow is just by delivering good service and getting the referrals.
yeah. So we have another question that came in, and I just have to find it here. 1 second. Okay, so this is a lady that texted us or emailed us, sorry, about some of the issues that are going on with a major corporation, and one of Magna International. So everyone's pretty familiar with that, Frank Stronach.
Hmm.
Excuse
Yes.
me, Stronach. And he's been recently charged with multiple charges of sexual assault. The question was, if we own that stock, should we continue owning that stock or should we sell it?
Okay, so that's a much harder question than the one I asked you. We do own
Mm-hmm.
Magna, and this client was asked, she was suggesting we should sell it if based on the allegations against Mr. Stronach. So my answer to that is, first of all, Frank Stronach has not been involved with Magna in its day-to-day operations for many, many years.
Mm-hmm.
Second, even if he were, and I have no opinion on this case, I'm not familiar with it, other than the headlines. But if any executive were charged with a criminal offense, how would we handle that? In 2024, whether right or wrong, the court of public opinion convicts you immediately. And a criminal charge would undoubtedly accompany the resignation or termination of that person by the company the same day. So
Yeah.
we are not selling Magna because of that story. And with interest rates going down, we feel that that will provide a jolt to the consumer and improvement to auto loans, which have weakened in a higher rate environment. So that is my answer. We hold Magna, and the Frank Stronach story doesn't have any impact on our investment thesis.
Yeah.
All right.
Okay.
My second question for you comes from Etobicoke. And this was a husband and wife who were thinking about going to the bank to have a financial plan created. And they simply asked, do you do financial plans?
We are a portfolio management company, so we're looking at the investment side of the business. but we absolutely have to collect all of the big picture of all of the information from the clients to open up the account to begin with. And then maybe a little, if they want a little more services, we absolutely can offer that and do both sides of credit and the investment. Not saying that we're doing any credit business that is done at the banks, like mortgages, loans, and line of credits. But we can absolutely take a great picture to figure out over the lifespan or the next projection of 20, 30 years, what it looks like for them. So yes,
So the answer is yes, we do financial plans.
yes, we do.
We've done them for two or three, I think three people that I can think of off the top of my head, and they found it very valuable.
Mhm.
And it's valuable for us too.
Yep,
So
great insight.
yeah.
Okay, so there's another question that comes out of Kitchener that I'm reading this off of my picture off of my phone, so bear with me, okay? So this lady, I guess emailed or texted, do you mind me inquiring about the home ownership aspect? I feel like I'm constantly told to buy real estate as the wealthy barber encourages, which you followed and became mortgage free really quickly. I feel like becoming mortgage free that quickly is beneficial just due to the interest that you would have been paying for an extra 22 years. But I've been hearing a lot of finance people on TikTok mention that your home isn't an investment, you're not making a lot off of it because of the interest, tax, and maintenance. So what's your opinion?
Okay, that is a great question. I took that away and decided I'd look at the numbers to give her a fulsome answer. I'm going to share my screen with you just so you can see the Excel spreadsheet that I sent, and we can go through the information together. Okay, so, oh boy, let me just move some of these boxes around. Okay, here we are. Okay, so let's start with column B, the value of a property. So I just asked ChatGPT, what is the average price of real estate in Kitchener? And it told me 700,000. I then asked how much real estate has gone up by in the past 40 years on average. It told me about 5% a year. So that's how these numbers in column B are extracted. And then columns C, D, and E are expenses to owning real estate. And that's what this client was asking about. So ChatGPT told me that property taxes on average are about 1.1% a year, and that your maintenance fees are what was that? I think that was around 2% of the property. And then I use 5% for the mortgage interest. And if we scroll down, you'll see that the property 25 years after buying it would be about 2.4 million. But look at some of these costs. Property taxes, 393,000, maintenance fees, 700, mortgage, 500. Doesn't leave you a lot. Money made,
Yeah.
27,000. And then I compared it. I said, okay, you'd be spending this much on a mortgage. Rent would be less. Let's just say you invest the difference between what you would spend on a mortgage and what you would pay for rent. And you took that difference, you invested it in stocks. If you got a 7% return on average over 25 years, your portfolio would grow to about 967,000. Let's say you then take capital gains at the end of 200, you'd make about 520,000. So this is now, I guess someone could quabble with me about the capital gains, but as you can see here, you would make significantly more owning stocks. Flies against conventional wisdom because we're all always told that your home will be your best asset, your best asset over time.
Right.
But
Hmm.
numbers say otherwise.
Yeah, it's one way of, especially with the cost of real estate these days, and for the, I guess more leaning towards the newcomers coming into the employment market, it might be an alternative, maybe, to look at rent versus purchasing a home.
Yeah, yeah. It's a lot harder now to buy property than it was 20 years ago. And with low interest rates,
Mhm.
it's really boosted the value of real estate. People don't buy the home, they buy the mortgage payment. And with higher rates, it's become more difficult.
Right.
But anyways, that's our answer. So we'll do this segment once a month. I think it's valuable because other people might have the same questions as the ones asked in each of these webcasts.
Right.
So we'll do our next one in a month, and we'll be making a mental note of interesting emails we get.
Yeah. Okay.
All
Sounds
right.
good.
Thanks,
Thanks,
Sunny.
Jeff.